Ladies and gentlemen, welcome. My name is Dvorkin and I'm a managing partner at 4D Capital. We're going to be talking about VIX today, and particularly we're going to try to tie it up to the war cycles that I talked about yesterday. So this is going to be a very important presentation, not only from a financial perspective, but also from the geopolitical perspective and what's going to happen over the next couple of months, perhaps as soon as over the next couple of weeks. So stay tuned. So once again, my name is Dvorkin, and we specialize in a very unique mathematical approach to the stock market, where we analyze the market and individual stocks in multidimensional space. And when we do, essentially perfect order emerges. On top of that, we developed a number of very powerful timing indicators. And when we combine both of them together, we can very often predict what the overall stock market and individual stocks will do going forward in both time and price. I personally believe our work is nearly identical to what Jim Simmons was able to accomplish at Renaissance Technologies. If you're familiar with Jim, of course. So our firm's goal is to identify stocks that will 2x, 5x, 10x within a relatively short period of time. And understandably, who's not looking for that, right? But we have a very powerful tool associated with our work. We've developed a very powerful software over the last couple of years, which allows us to calculate the entire market in multidimensional space, and based on that, identify what stocks, for example, will bottom, put in very important bottoms coming up, and then subsequently increase in value quite substantially, that 2x, 5x, 10x. I'm not going to get into details today about that, but you can listen to some of the other videos and I'll explain it in much greater detail. So let's switch to VIX and of particular importance. Yesterday we talked about the upcoming nuclear war cycle. Just to repeat myself, we believe that World War III has already started. It's just in various phases around the world, with the bloodiest phase currently being Russia versus Ukraine, or Russia versus NATO, because it's not the Ukrainians who are fighting Russia, but NATO itself. If you're familiar with the situation, you follow the current events, you probably would agree with my statement. But what I was talking about the nuclear exchange between Russia and China alliance and NATO members. So what's going to happen over the next couple of years is things will get progressively worse and worse and worse until we get to the point where somebody crosses a red line, whether it's going to be the US or it's going to be Russia or it's going to be China, doesn't really matter. Somebody's going to cross the red line. And when that happens, nuclear weapons will be used on a massive scales, because if you use one of them, you're going to use all of them. That's just the doctrine. It's impossible to avoid that particular outcome. And so that particular exchange, according to our mathematical and timing calculations associated with the stock market and the war cycle that I talked about yesterday, I'm going to talk about today, is the summer of 2029. That's when nuclear weapons will be used on a massive scales, and most of the northern hemisphere will be destroyed. Okay, so that's not a very cheerful view, but I'm just telling you what our work is showing. So today what I want to do is I wanted to look at VIX. If you're not familiar with financial markets, let me just pull up this chart. So VIX is a volatility index. Once again, for those who are not familiar with financial markets, and I'm assuming quite a few people are going to be watching this video who are not very well versed in it, so I'll explain it in very simple terms. So when you see very powerful spikes on volatility index, it means typically that there is something going on in geopolitically. Most importantly, something's going on within financial markets. Most of them, most of the spikes you see here are essentially related to significant declines or collapses, economic collapses, financial collapses within the stock market. So this one, for example, was 2008, 2009 sell-off, market crash, meltdown, whatever you want to call it. This one was COVID, so when the market collapsed quite significantly within a relatively short period of time. So basically, when the market moves to the downside, VIX spikes higher, and when the market conditions are relatively calm, then VIX declines and kind of bounces around here at the bottom, which is the situation today. Okay, with that in mind, typically, particularly for those who've been following our videos, our typical mathematical calculations and timing calculations do apply, but our mathematical calculations typically don't apply to VIX because it's nearly impossible to square the chart and calculate it in multidimensional space because it's an entirely different animal. As I mentioned before, while the stock market moves kind of up and down, this one kind of flat lines with spikes that represent periods of high volatility within the financial markets. Okay, so what you're seeing here, very quickly, I'm just going to mention it for those who are not familiar. So the triangle, as you see on the top and the bottom, are cycle composites. And bottom composites are responsible for putting in bottoms, and top composites are responsible for putting in tops. This is a very simplistic representation of a very complex mathematical concept where we scan the chart back in multidimensional space, we identify those composites, and we project them into the future. What makes matters even more complicated is that these composites, there are typically multiples of them running for both the top and the bottom, but if you are aware of that and you can identify them and you put them together, you can essentially replicate exactly what's happening on a two-dimensional time and price chart that you see here. Okay, so in this particular situation, I'm not going to talk about VIX. VIX is doing exactly what it needs to be doing as per our earlier forecasts. But these particular lines are of significant importance. So they represent what we call cycle clusters. Once again, very simplistic representation of very complex mathematical concept. But what we do is we scan the chart back, once again, multidimensional space, using our proprietary cycles that we've developed over the years. And then we project them into the future. And what we found over the years is that when the important turning points happen not when any particular cycle arrives, but when there's a multitude of cycles arrive at the same time. So when we have 2, 3, 5, 10, particularly if they're powerful cycles arriving at the same time, then rest assured there's going to be an important turning point there. Depending on the time frame, of course, you're looking for. It more applies to longer term than shorter term. If we have short-term composition that we're looking at, we have to look at the short-term cycles, but the same concept essentially applies. I always give Dow Jones March 6th of 2009 bottom as an example. At that time, we had 15 very powerful cycles arriving within a 3-day period of time. So if you're familiar with this, then you know that there's going to be a very significant turning point there going into the bottom. And that's definitely what happened at that juncture. I know this probably doesn't make any sense to you at this point in time, especially if you're not familiar with financial markets or if you don't follow financial markets. But trust me, this is going to make sense to you in a second. So these cycles, I'm not going to go through all of them just to save time, but there's a very powerful cycle clusters arriving on November 25th. And then subsequently, there's multiple 3 very powerful cycle clusters arriving, let's say on December 15th, plus or minus 5. We typically say plus or minus 5 trading days, but let's say plus or minus 1 week. So December 15th, plus or minus 1 week, and November 25th cluster. Very, very important. I'll bring this together in a second. What does that mean in terms of VIX? When we look at it from a VIX perspective, it indicates that there's most likely going to be some sort of a spike higher during that period of time. And this translates us or transfers us into the war cycle discussion. So yesterday, when I did that long presentation about the upcoming nuclear exchange between Russia, China, and NATO. Okay. So I talked about this book. I talked about the stock market cycles that point towards that summer of 2029 nuclear exchange. I talked about the 84-year cycle that also points towards a significant war developing around that time. But I also talked about the secondary cycles. And in this particular situation, secondary cycles are very important. So there are a number of them. And actually, there were quite a few. I'm just going to mention what I mentioned yesterday very briefly. But you can do your own research and apply the same 84-year cycle to various wars. Most of them has to do with the US, but it applies to other wars to lesser extent. But let me get to it, okay? So basically, World War I started in, World War I started in 1914, but the US officially became involved in World War I in April of 1917. If we take 84-year cycle from that juncture, we end up in May of 2001. just 3 months before the events of September 11th and the beginning of the Middle Eastern wars in Afghanistan, in Iraq, as you know. Okay, so that's one of them. Another very interesting example of it is the war. One second, I have it somewhere here. Okay, so another very interesting example of it is what happened actually in June of this year. So we had Germany invade Russia and really kick off World War. You can argue that it started before that, but the biggest part of World War II, as you very well know, started on June 22nd when Germany invaded Russia. Well, if we take 84-year cycle from that period of time and we project it into the future, then we end up in June 22nd of this year, 2025. And what happened in June 22nd of 2025? Well, Mr. Trump decided to bomb Iran for the first time. The U.S. has never done that directly. You know, they had some skirmishes with Israel, but that was a completely different situation when the U.S. actually directly attacked Iran. So a very important marker. And you can argue, well, nothing really happened during that period, or subsequently, nothing came out of that, and it kind of died off. And I would agree with you, but you also have to take into consideration the fact that this was just a time marker. And the war that has began at that point, perhaps between Iran and the United States, will only accelerate going forward. And you know, currently there's a lot of talk that the U.S. is going to repeat the strike, whether with Israel, without Israel, doesn't really matter. But point being is that something very important happened on June 22nd, and that will increase, this will continue into the future. So when we look back from, let's say, 2-3 years from now, at that date is going to become very, very important. There's another one I wanted to mention, but for some reason it's just my brain is refusing to remember which one it was. So let's talk about December 7th of this year. As you know, December 7th, 1941 was a very important day in American history. That's when Japanese attacked Pearl Harbor, and that's when the U.S. officially entered World War II. And as I mentioned before, this 84-year cycle is very, very important. It has a very unique way of showing up throughout history. And what it's indicating to us is that something very, very important is going to happen around that time. And this brings us back to the VIX discussion that we had just a few minutes ago. So VIX is also identifying a very powerful juncture at that December 7th, plus or minus a few trading days, time turning point. Actually, this 84-year cycle, if we want to be exact, arrives not on December 7th of this year, but on December 13th of this year. So there's a little bit of variance associated with it. So most likely, and as I mentioned, our VIX cycle arrives on, well, there's one in November 25th, but 3 of them arriving around December 15th, plus or minus 1 week. So within that margin of error, let's say between December 5th and December 20th, something very, very important is going to happen, okay? Now, it could be a geopolitical event, and as we get closer, we can discuss this in a little bit more detail, but there's a couple of possibilities that currently present themselves. I don't particularly think anything's going to come out of Venezuela in terms of importance for United States financial markets. We might have some kind of a war, we might have some skirmishes around that area, but I think either Iran or something developing between NATO members, particularly the US and Russia, will happen. Perhaps there's going to be a decapitation attempt by the United States against the Russian government, which is, in my opinion, is going to be absolutely sheer insanity, but nevertheless, it is possible. Actually, there's quite a bit of evidence that the NATO and the US are positioning a lot of assets for just such an action. But let's hope not, because that would be suicidal. and the only thing that's keeping me calm at this point in time, I guess, in this particular situation is our actual work cycle calculations that indicate that yes, nuclear exchange will happen, but not at this point in time. It's going to happen once again in summer of 2029. But this December 7th / December 15th period of time, extending to up to December 20th, is going to be very, very, very important in American history, because both the war cycle and the VIX cycles are indicating that something very, very significant is going to happen during that period of time. Because, you know, if it's just happening overseas, you know, perhaps some sort of a bombing, even with Israel being involved, for example, the US financial markets are not going to react by very much. But if something significant happens, for example, between the United States and Russia, then the American markets will definitely react to that. So this is our marker. This would be our confirmation that our war cycles are indeed developing as we anticipate them to develop, as well as our financial market calculations developing as well as they are expected to develop. And it's going to be very interesting to see what comes out of it. So, in conclusion, what's happening with the VIX is not very important in terms of financial, no, I shouldn't say that. It is very important in terms of financial markets. But in this particular situation, it is more so important because VIX volatility, significant volatility, according to our time calculations, lines up perfectly with our December 7th, 84-year war cycle. And it indicates that something very important is going to happen, let's say between December 5th of this year and December 20th of this year. And you can throw one more week on top of that as a margin of error. So I just wanted to get it on record, and it's going to be a very true test of our cycles, not only when they apply to the financial markets, but also when they apply to the war cycle. And the latter one is of utmost importance, because if something does happen within that relatively short period of time this December, it would essentially confirm what we've been discussing lately, particularly that the nuclear exchange between Russia and China alliance versus NATO members is indeed coming up in summer of 2029. So with that in mind, thank you very much for your time. We'll be back with our regular financial analysis of the stock market tomorrow. Have a wonderful day ahead. Bye-bye.